Home Depot, the world's largest home improvement retailer, reported quarterly financial results that sent the stock price higher by roughly 3.5%. I've had this stock rated as a hold this year, and it's up 5% year to date. It's performing better than I expected. I thought coming into 2025, the headwinds from the real estate industry, slower home sales, slower household formations, people spending so much during the pandemic on home improvement, on top of the new headwinds as a result of tariffs, I thought made it a difficult time for Home Depot. But the resilient company has performed better than I expected already. I'm going to share with you the big picture items from the company's latest earnings release. Update my recommendation, let you know if I think it's a buy, hold, or a sell. I updated my discounted cash flow valuation model for Home Depot and updated the fair value that I calculated for this company. I'll share that with you as well. So there's a lot to cover, and this is a relatively short video, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so Home Depot reported their quarterly financial results this morning, August 19th. Comparable sales for the second quarter of 2025, second quarter of fiscal 2025 increased by 1%, and comparable sales in the US increased by 1.4%. Comparable sales measures sales at existing locations that were open for at least 12 months. It provides a overview of demand for the company's products, excluding things like new store openings and the impacts of acquisitions or divestitures. Net earnings for the second quarter were 4.6 billion, the same as in the second quarter last year. The management team saying that their second quarter results were in line with our expectations, and the momentum that began in the back half of last year continued throughout the first half as customers engaged more broadly in smaller home improvement projects. So as a result of performance as expected, the company reaffirmed its guidance for fiscal year 2025 for total sales growth of approximately 2.8% and comparable sales growth of approximately 1% and an operating margin of roughly 13%. So these are less than usual results for Home Depot when you evaluate the company on its 10-year history. So if we look at 10-year historical trends for Home Depot, this company grows revenue anywhere between 7 to 9% per year. That's its normal level of growth. Given the industry it operates inside, which is the home improvement industry, which is a roughly $1 trillion industry. And the company boasts strong competitive advantages, not only against its rivals like Home Depot, but also against new entrants like Amazon that are trying to gain market share in the home improvement industry. Some of the reasons why Home Depot has been able to push back Amazon from encroaching in this industry is the types of products it sells. Big and bulky items are difficult for Amazon to deliver cost effectively. Additionally, many of the items that Home Depot sells are urgency items, things that you need for your house in that moment, and you can't wait for the next day for delivery or 2 days or 3 days later for delivery. You need those items right now. So you go to your local Home Depot, you buy those items, and while you're there, you also buy some other items. Also, I found that Home Depot's prices are comparable, if not better, than Amazon. We recently moved, and just one category, I know it's anecdotal evidence, but moving boxes were less expensive at Home Depot than they were at Amazon, and the quality of boxes were better from Home Depot than Amazon. So just one point of evidence there. I know it's anecdotal, but it's just to show that the customer value proposition against a company like Amazon is still strong for Home Depot. It's one of the reasons why it's been able to stay alive well and thrive actually over the previous decade and 15-year periods, even though most brick and mortar retailers have succumbed to the pressure that Amazon placed upon it. And there's only like a handful of retailers that have been able to withstand this pressure from Amazon over the previous 15 years. And those are, Home Depot, Lowe's, Walmart has found the resurgence. Costco, of course, has persistently outperformed. And many others have just struggled to survive amid that backdrop of Amazon increasing market share in consumer wallet. In more specific data, Home Depot provided saying that comparable average ticket, or the amount people spend every time they visit Home Depot, increased 1.4% in the 3 months which ended August 3rd. The customer transactions total decreased to 446.8 million, down from 451 million. So people are making fewer trips to Home Depot, but they're spending more with each trip. And likely they're buying fewer things with each trip, because if the average ticket only increased by 1.4%, when inflation increased by more than that and the price of items increased by more than that, then that is evidence that people are buying fewer things when they are going to Home Depot. The average ticket increased to $90. That was up from $88.90. I think most of this is due to inflation, and that's what management also alluded to, that prices of items increased slightly. And they also said that prices of items are going to increase more meaningfully from this point onward, because now is when they will start to receive the items that will be impacted by tariffs. And so they will need to raise prices in stores so that they can recoup some of those higher cost of importing those goods. And I wanted to check out their inventory balance to see if they front loaded some of that inventory, and it looks like they did. You can see merchandise inventories increased to 24.84 billion in the quarter that ended August 3rd. Compared to the same quarter last year, it was just 23 billion. So you've got an extra 1.8 billion dollars of inventory compared to the same time last year, roughly 10% increase, when demand is not there to justify this increase. So this increase is not due to an increase in customer demand, but rather it's an increase because they wanted to get ahead of the impacts of tariffs. So they built up their inventory while the tariff rates were temporarily lower, or before tariffs were implemented, so that they can decrease their cost of goods sold, at least for a while they get more information about consumer behavior, while they get more information about where these tariffs will actually settle, because there's a lot of vagueness with these tariff announcements and supposed deals. It's just broad strokes and just uh, vague agreements where businesses need more detailed, specific information so they can make their calculations and pencil in their orders and expectations for their holiday sales and for sales throughout the year. So this was a nice precautionary move by the management team, which I will say Home Depot's management team is one of the few that I give credit for handling the pandemic uh, excellently on both sides, right? There was the moment during lockdowns, and then there was the moment during the economic reopening. Many management teams did only one of those two things well. They either got it right during the pandemic, during the lockdowns, or they got it right during the reopening, but very few got it right on both sides. And Home Depot is one of the companies that got it right on both sides of that. And so I give the management team credit. And when I see a management team that's handling those difficult circumstances effectively, I'm more inclined to want to buy the stock, even if the valuation is not as favorable. I give it a boost because of that management team effectiveness. So speaking of valuation, Home Depot stock looks overvalued. And I calculated and updated my intrinsic value per share. I actually lowered the intrinsic value per share calculation because I incorporated new estimates from Wall Street's analysts that follow this company and what they expect from this company over these next several years. And my intrinsic value decreased to $302 per share. Current market price is $408 per share after rising following these earnings results. Now, it looks overvalued even when I look at the valuation on a forward price to earnings basis. Home Depot is selling at a forward PE of 26.5, which is near the highest it's been, going all the way back to 2016. And it's not like the company is facing excellent prospects over these next few quarters and next few years to justify paying this premium right now for Home Depot. It's got the headwinds from the housing market, higher interest rates are slowing down the housing market, and then you've got the impacts of tariffs, which are still uncertain. So to update my recommendation on Home Depot stock, I had it rated as a hold and I last updated it on June 30th. I'll update this again following the earnings results and reiterate my hold recommendation for Home Depot stock.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.